Hey everybody, I hope everyone is doing well and had a good day. This is the overview of the Emini 5-minute chart for Thursday, September 19th, 2024. I always like to look at the higher time frame context, the daily chart, going into the day. And here's what we had coming into the day. This is the extended hours chart, so the Globex, so that there's less gaps. I prefer it to the over the day only session. It's the same chart, but just less gaps this way. So the market's in a trading range. We're sideways. We're getting lower highs and higher lows, but we broke above this lower high here today or yesterday. We're in this area where the market was in a tight trading range, but we rallied up to it fairly strongly. And even though the context isn't very good for the bulls, maybe it's two legs up in a trading range, this rally was strong enough that the first reversal will probably fail. There's probably buyers below looking for a second leg up, even if it's just for a scalp. And so even though we have this bear reversal bar, the body is small, the context isn't great when you're in a maybe 5-bar bull micro channel. Sure, it might be a double top, but this is probably going to need a trend line break and a retest before there's any major reversal. So maybe bears sell below, but they're taking a chance and they need momentum. I think more likely buyers below yesterday's low and probably going at least a little bit higher. The market's in a tight trading range here, expanding. The range is expanding. This is an outside bar, and outside bars are expanding triangles on smaller time frames. So we had an expanding triangle here, and right around the same area, we're getting another expanding triangle here. I think if we do go above yesterday's high, it's a bad buy signal. So the upside, and you can also add to the fact that it's a bad buy signal bar. It's at the top of a big trading range. So I would suspect that the upside is limited. And then here's the 5-minute chart for today. And I'll briefly touch on this. I didn't do a review for yesterday because I figured I'd talk about this in this video, and because a big reason, whenever you have an FOMC report day, you basically treat the day like two separate days. And so there's the first half of the day, even though it's more than half the bars, it's the first part of the day, and you kind of make believe that it's its own day, and then the day restarts on the report at 2 p.m. Eastern time. So here's your close of the first day, here's your open of the second day, or the second part of the day. A lot of this, it's really common to get tight trading range price action leading into an FOMC report. And so with this report, big outside bar, confusion. I don't want to spend too much time on it, but basically you can see the market's response. It's a volatile trading range. When it's bullish, they sell. When it's bearish, they buy. A couple of legs up, we go down for a couple of legs, get a couple of legs, back up, big down, lots of overlap. But what was interesting is coming into today, we had a big gap up, and maybe it's a wedge bottom. 1, 2, 3. We get a big bull breakout. The bulls are hoping maybe we go for a measured move of the wedge. Maybe it's something like that. We go up here. But whenever there's a big gap, I like to look at the Globex session to see if the overnight was very sideways and it's a climactic kind of something like over here. You know, if this was the end of a session somewhere down here and then the next session opened up here, you'd want to know the context and whether the market was trending strongly or if it was a trading range. So if you pretend you came into the day, the market's opening way up here and you don't know what happened, it's good to look at the Globex and you could see, well, in this case, maybe it's an expanding triangle, breakout mode, and not a very credible bull breakout. But here, so here's the end of the Globex session, the day session yesterday. Here's the open of the Globex session. And you can see a little climactic here, deep pullback, little climactic, but strong breakout. And then the market rallied in a tight bull channel. And here is what we had going into the day. Tight bull channel. It's a pretty decent bull trend. Lots of bars above the moving average. And really no significant trendline break at this point. And I'll go a little bit ahead here just to say this is a big bear bar. And it's an outside bar, but still not really a credible trendline break. And it's possible it's an expanding triangle. 1, 2, or 2, and 3. So the bulls see an expanding triangle bull flag. The bears are hoping it's a reversal, but it's the first big bear bar in a strong bull trend. So the bulls might buy it. So here's what we had coming into the day. The big gap up, we know it's a decent rally on the Globex session, and then we have this sell-off on the open. Bar 1, strong bear bar, but bad follow-through. 3, another strong bear bar, but bad follow-through. If you think about it, bears, maybe they sell the close here, maybe they sell for any reason, and then they get a bad follow-through bar, and then they get acceleration on bar 3. They'll probably look to take profits. The market's getting sell climax, then a pause, then a sell climax, then probably a pause, maybe one more sell climax like we got here. But after 3 pushes down, after a big gap up, there might be a deep pullback here, or even a reversal. And then when you get bar 6, bull bar closing on its high, probably always in long. I don't know if we flipped to always in short. I think we're always in long based on the gap up. Maybe always in short, bear trend bar and follow through. But as soon as you get this bar, always in bears, I think always in bears get out and bulls can start to buy. Then you get a breakout and follow through. You can buy the close. Leg 1, you can buy for any reason, buy a pullback. Buy the first reversal attempt, low 1, but strong enough bull breakout for buyers below. Second leg, you can buy this bar. And you can see traders did, reversing up strongly, probably going higher. If you didn't buy, maybe you wait for bar 9, buy above that bar, buy the close of this bar. But traders are expecting a second leg up after the breakout. So breakout, pullback, second leg, probably going at least 1 tick above bar 1. The odds that bar 1 remains the high of the day on any given day is about 20%. And after a big gap up and sort of a parabolic 3 push pullback, followed by a decent bull breakout and follow through, and you can see the market's beginning to channel up. The odds that bar 1 will remain the high of the day at this point, maybe 40%, 50%, but when you start getting this back to 40%, maybe 30%, 20%, and then of course we got above it. But bar 12, there's a problem with bar 12. It's the first bar closing above bar 1. So bar 1 through bar 5 is a breakout on a higher time frame. It's a sell climax. The odds are there are sellers above. This bear breakout should get a second leg, sideways to down. The context isn't great because of the gap up, but it was enough for a second leg. And then bar 5 was a bad signal bar, but the market rallied. So we have trapped traders at the bar 5 high. And then we have 1 pullback, 2 pause, 3. So 3 pushes up, bar 12, the biggest and strongest bar of all the bars in the rally. And it's the first bar to break out to a new high. So the bulls still need follow through. Even if they get it, it's still 3 pushes up. You're going to have some exhausted bulls looking to take profits. But it is a parabolic wedge, which means it's minor. And it's really a breakout on a higher time frame. So even though it's a wedge and you're expecting a correction, maybe 10 bars and 2 legs, this wedge is only made up of 6 or 7 bars. So the pullback could be brief. Maybe we go, let's see, common pullback level is 50%. Let's just make sure. There we go. So we have the entire parabolic wedge. So 12 breakout bar, but then yes, follow through 13, but why is it so much smaller than bar 12? Why are there sellers into the close of the bar? If this is a strong bull breakout, you should have another big follow through bar closing on its high. So a little suspicious. Now the trader's equation for the bulls is getting bad because you think about the market cycle, you think about risk reward. If you're buying here, your theoretical stop is down here. Now nobody's going to let that stop get run because it doesn't make sense to sell below bar 5. If we fall below bar 5, there's probably buyers there. But in theory, the bulls buying anywhere have a stop here, maybe below bar 9. I think below bar 12 is a skunk stop. And for a bull to buy here, put a stop here, 1 times their risk is all the way up here. And you can only risk 1 times. You can only go for a reward 1 times your risk if you're 60% certain that the market is going to get there. And when you have 3 consecutive buy climaxes testing above a sell climax, you got to be thinking the market may pull back here, even though the rally from 5 to 13 is strong enough for its own second leg. On a higher time frame, it is a breakout. The problem is we can get a deep pullback, and if this is a bull breakout here, another bull breakout, another bull breakout, 12-13, you know it's not a breakaway gap because it's not at the start of the trend. This would be down here. So this is either a measuring gap or an exhaustion gap. And when it's 3 pushes up, you're getting the best looking bull bar, big down, big up. There's a real possibility we come back and test at least the breakout point of bar 11, maybe even the low of 12, and then maybe 50% of the entire rally. So here. More disappointment, we fell below 13, rallied, it's a high 1 with, in bad context, 3 pushes up. Probably going to get a deeper pullback, and that's common with high 1s. And then 15, it's a little bit of a micro double top. We rallied on 13, sold off on 14, rallied on 14, sold off on 15. It's a lower high. And then a bear trend bar. So always in bulls, maybe they get out below 15, but they can buy again above a bar closing above its midpoint, preferably a bull bar. Bear breakout and follow through, 4 bar micro channel. 16 is a weak buy setup, probably sellers above for a second leg down. But we might be testing that 50% pullback, and we are on 16. Inside bar, so the bears get another bar in their micro channel, but getting a lot of overlap. There might be bears scalping out. It might be 15, leg 1, 16, leg 2, 17, leg 3. Around a 50% pullback. More sideways on 18. Disappointing follow through for the bears. And it's close to consecutive inside bars, which might be a final flag. And then we went outside up on 19. That's a bar that any bear that was selling probably gets out above 19, and bulls can buy. And they can argue bar 19 is a double bottom with bar 9. We kept a gap open. If we reverse here, this still might need a second leg down, but it's okay to buy here and use a wide stop. And then 20, brief second leg down, but then reversing up again, 22. If a bull did get out or wasn't in for any reason, they can buy above 22. Bears, if they're short, I would get out above 22. So moving along here, the bulls get a decent breakout. That might be a leg one, and any pullback, any reversal attempt will probably be minor and then lead to a second leg up. So the bears try to get a reversal. We still haven't had a bar touch the moving average today. So a spike, pullback, and the market is beginning to channel. Maybe something like this. First touch of the moving average all day. Traders will probably buy it. The bears hoping for a major trend reversal here. So bull trend line break, retest of the highs, and then a micro double top and a sell-off. They're looking for this to become a major reversal, break below the neckline, and fall for a measured move, maybe from here to here first. So they break below here, get down to a new low of the day. And if they succeed, they'll look at the bigger measured move down to here. The problem is probability. So far today, yeah, the market's been sideways, down, up, but you got to notice we're making higher highs and higher lows. Bar 9 was a major higher low. It went to a new high, strong breakout to a new high. The market did not fall below that major higher low. So in theory, a bull, they can see, all right, strong enough bear breakout, should get a second leg down. There's your second leg. It didn't fall below the theoretical stop for the bulls, and then we reverse up. Bulls can risk to here, buy here, in theory, and then maybe go for a swing. Bull breakout and follow through. One reversal attempt, second reversal attempt, but then a continuation on 31. Bull bar closing on its high. Bulls can buy. Bears, if they're short for any reason, they get out. We get a follow through bar 32, probably going to at least test the high of 13. But lots of overlap. You can tell the market is in the channel phase and it's constantly trying to reverse. 37, we went to a new high of the day, sellers, but does this look like a major reversal? Probably not. There's not a major trend line break. The market is simply in a bull channel, and we may get all the way up here. Continuing sideways to up, we get a bear breakout attempt of a tight trading range. The odds are there's buyers below, scaling in lower, and buyers at the moving average. So that these bars are coming close to the moving average and the bull trend line. We have a high to above 45. Traders will buy. Then this is interesting here. This bull breakout, 48 through 52, it's one of the best looking breakouts all day. It's the first time all day that we've had 4 or even 5 consecutive bull bars. You look back, we've had 2 consecutive bars, 3, but we never had 5. So we're in a protracted bull trend. The bull trend has gone on for over 20 bars. It's not very strong. There's a lot of overlap. And we're only just breaking out above this prior higher high. And suddenly we're getting the strongest looking breakout in all the breakouts. And the reason I say this is the strongest looking breakout is because the bars, they're uniform in size. It's not climactic, not a lot of overlap. I mentioned there's 5 consecutive bars. It's actually a 6-bar bull micro channel. The problem is it might be the climactic end of the trend. And, back here, I was mentioning either a measuring gap or exhaustion gap. And we have to make the same decision here. But after a fairly weak rally, there's a lot of overlap and dojis. This may simply be an exhaustive buy climax before we get a pullback and start to go more sideways. So always in bulls, they probably get out below a bear bar. Maybe they get out below 52, a bar closing below its midpoint. But other bulls will wait for that bear bar closing below its midpoint. And then the first reversal, we failed. High one buy, but the context is not great. We're testing close to a channel line, and maybe we've had 3 pushes up. 1, 2, 3. It's nested. 1, 2, 3. And then 54, bear bar, closing near its low. Always in bulls, they get out below 54, and aggressive bears can sell, but bears are expecting a trading range. This does not look like a major trend reversal setup. So what we might get depends on how you draw it, but if we had a breakout attempt of a channel line, maybe something like that, then the market's attempting to break out of the top of a bull channel, 75% of the time the market will reverse within 5 bars and test the trend line. High 1, maybe high 2, 55, another bear bar, follow through, more follow through. We're testing the trend line, strong enough bear breakout that probably sellers above and second leg down. But these 2 bars are the first time the market fell below the moving average all day. The first 2 closes below the moving average all day. So bulls will probably buy that, but not ideal because maybe a 3-bar micro channel, a couple of the bars closing on their lows, not a lot of overlap. The bulls will want to see the market go sideways first. But at this point, we have fallen below a major higher low, bar 42, maybe 45, rallied strongly to a new high, but fell below it. So at this point, the market is either in a trading range or a bear trend, but we can get a deep pullback first. For a major trend reversal, we need a trend line break. We need, there's 2 ingredients. You need a trend line break and then a retest, and only then you can look for a major trend reversal. So here's our bull trend line. It's a good breakout. We fell far below the trend line. The bars are good, and we know that's you'd call it a leg 1 bear breakout, strong enough for a second leg. But you also know that we had a bull trend, and we're probably going to need a retest first, and we can get a deep pullback. So beginning to rally on 60, pause. This was strong enough for a second leg up. There's a brief second leg, but now we have a 5-bar micro channel, and that needs its own second leg. So maybe this now gets a deep pullback, which maybe 64 was. Pulling back to about 50%. There might be buyers here. 64 might be a buy the close bar. We pulled back even deeper. That's close to maybe a 90% pullback if you consider the rally from the low of 58 to the high of 62. The market pulled back about 90% and then reversed. The odds were this would get a second leg. This may be the start of the second leg, but these are minor reversals. Does this look like it's reversing this breakout? No, it doesn't look all that strong. It looks like a buy climax, a pause, a buy climax, a pause, and then a very deep pullback. The odds were there's buyers below for a second leg, but that second leg could be brief. So any bull buying here might only be scalping. They might be hoping for a test. The best they can maybe hope for right now is a test of the low of bar 55. It's a bad stop order sell, but it got a good entry bar and follow through. So traders are trapped here. This becomes resistance. We came close to it on 63, turned down, and then another rally up to 67, but we're testing the low of 63, another place where traders got trapped during 64. We're going sideways to down. Now we have maybe a second entry, double top, lower high, possible major trend reversal, maybe the bear sell below 68, but always keep in mind that for even the best looking major trend reversal setups, only 40% of them result in opposite trends. 60% of the time we get trend resumption or simply a trading range. This breakout's all right, but the follow through, we're getting a lot of overlap, not really getting big consecutive bear bars. Some bulls will even argue we hardly got a trend line break. If you draw it like this, it's just a more broad bull channel. But the reality is this is the most recent, more major breakout. It's occurring within a trading range, so it's minor. We can get a deep pullback before we get a second leg, but that may be what we have here. Breakout, pullback, two-legged pullback, and then maybe a second leg down. Getting a second leg down, but you can see what happened. Sold off, pulled back, sold off, pulled back, sold off a third time. Whenever you get a breakout below a double bottom, it's basically a variation of a wedge. So here's a double bottom, 58.65. The market fell below it, reversed up. Some bulls might buy above 71, but you're buying right at the moving average, which has been resistance since over here. The bar is fairly big, and this might be the top of the range. So if you're buying on a stop, you're buying in the middle or upper third of this trading range. And then maybe a low one short 72, probably buyers below. This looks like a trading range, and it might be a bear, spike, and channel. Channels evolve into trading ranges. So here's our channel, but 75% chance you get the bull breakout of the channel and the market converts or transitions into a trading range. So rather than getting a bear breakout and an even stronger bear trend, the odds are this will become a bear leg in a trading range and will come back up and test somewhere up here. That is how the market cycle works. Breakout, channel, and then trading range. And you can see that's what we got here. We did continue lower. The market was continuing to get lower highs and lower lows. There's so much overlap. You can see even a bull buying on a stop order here would be able to avoid a loss. They had plenty of chances to get out at break even, so not a very strong bear trend. Lots of overlap. On a lower time frame, it's a broad bear channel. For stop orders today, maybe you sell below 1 or sell to close 2, but it's early in the day and it's after a big gap up, not really ideal. And then bar 6, traders can buy above by the close of 7. You can buy above 9, you can buy above 10. I would not buy, or I would not be, let me put it this way, if I'm buying above 12 or buying the close 13, I'm managing the trade with a lot of focus. We have 3 pushes up, we're breaking out to a new high, and we're getting bad follow through. And if you're buying here, you're buying far from the moving average, you're buying a late leg, you really need momentum and you need sustained follow through, and you get disappointed on bar 14. Maybe you sell 15, it's aggressive, it's a tight bull channel, the downside probably limited. And then I thought 22 was a reasonable stop order buy, 23 buy the close, and then 31 you could buy, 32 you could buy. Always in long, but not super strong. And then the same problem I had with 12 and 13 I have over here. It's a good looking breakout, but it could be a bull trap. It could be a late leg. And it could be trapping bulls into buying late in a bull trend. And if you think about the market cycle, I kind of talked about it over here a little bit. If we visualize the market cycle, here's a bull breakout and it's fractal. So, there's different ways to look at it. You can say the gap up was the breakout, this is the pullback, and this entire rally is the channel. Or you can zoom in and say this is the breakout from 5 to 13, this is the pullback, and this is the channel. But in either case, remember that channels evolve into trading ranges. And remember I said there's a 75% chance. Well, let me rephrase this. When you have a bull channel, you can think of it as a bear flag. When you have a bear channel, you can think of it as a bull flag. The reason for that is when you have a bull channel, there's a 75% chance you get the bear breakout. And that's due to the market cycle, where you get a spike in channel, bull trend, here's the channel. The channel more likely will get a breakout of this lower line, the trend line. And this will eventually be a leg in a trading range. We could test all the way back down to here, even here. Same is true over here. Bear breakout, pullback, we're in the channel phase, and the market begins to channel down. But after 3-4 legs down, you have to be wondering if the market's going to pull back all the way up to here. So buying up here, not ideal, because you could be buying high in a trading range. Even though it looks like the market's in a bull channel, and it is, you might be in the late stages of that channel phase. And this might be a new bear breakout. So you can sell for any reason, but because of the context, you may get a deep pullback. We get maybe a 50% pullback there, but always in short. And then low 2, 63, not ideal because micro channel, doji signal bar, maybe you sell below 64, and you could sell below 60, 68, double top after a bear breakout, probably going at least a little bit lower, but your follow through is pretty bad. You're getting a lot of overlap and traders are scalping. It's a limit order market. Today was a trading range day, and you can see a lot of big down, big up all day long. Even in the channels, we had a lot of overlap. And where do we go tomorrow? You can see the market broke out above the all-time high. Again, this is the extended hours chart. So remember I said it's a trading range day. And it's looking like a trend day because of the gap up. So if you look at the day only session, here's what it looks like. And it's actually interesting, and we can talk about it from this perspective. The market had this big rally, deep pullback, and then another leg up to a new all-time high. We gapped up here, so you can think of it as a breakout, and then we went sideways. So bad follow through. When there's a gap, when there's a gap up, the bulls want follow through. So gap up here and follow through, the market went higher. Gap down here, follow through selling, the market went lower. Ultimately, after a deep pullback. But here, we have a rally and then overlap, rally, and then sideways. We're at the top of a trading range. It's 2 legs up in a trading range. I think the upside here might be limited, and we could start to go sideways. Probably sellers above today's high, and maybe buyers below. But if you're buying high in an overall trading range. All right, thanks everybody for watching. Hope everyone has a good night.